In this presentation, we will continue on with our comprehensive proprietorship problem, this time working the closing entries process. We are currently in the closing entries tab. Before we continue on with the closing entries process, take a quick review of what we've done so far. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We've gotten to here and where we stand at this point. We started off with the journal entries. This is going to be on the journal entries tab. I'm going to click over here on the journal entries tab. We have entered the normal transactions during the month, during the time period, the month of January in this case, into the general journal, posted to the general ledger, creating the trial balance from it. This is what typically happens, or what takes up most of the time for an accounting department, recording the normal transactions that are financial transactions in such a way that they can then be compiled to the end product, the financial statements. At the end of the month, we had our adjusting entries, taking this trial balance that has been created from our normal process, moving to the adjusting entries tab. We take those numbers and now call it the unadjusted trial balance, entering our adjusting entries here to get to the adjusted trial balance, that trial balance which has the entries to make it as close to a adjusted trial balance on an accrual basis as possible, meaning our numbers are as accurate as possible on an accrual basis so that we can then be using them to create the financial statements, which of course is our next step, going to the financial statements tab, taking those same numbers from the adjusted trial balance as the building blocks in debit and credit format, used then to create the financial statements, the end product, the main event of our accounting entry process, which includes, of course, the balance sheet, the income statement, and the statement of equity. Now, this is our main goal. This is what we're driving towards. We want to have the financial statements as accurate as possible so readers can make decisions on them, whether they be internal or external users of this data. But it's not the end of the accounting cycle, because what we want to do is similar now to us kind of cleaning up the shop at the end of the day if we are in a cafe or something like that. We've already made the money, we've already done the main event, we've already, all the activity has happened. Now we're it's dark and we're closing up the doors and whatnot at the end of the day so that the morning shift can do it all again. That's what we're doing here in the closing process. The financial statements are done. We need to reformat our system so that the morning people, or the people at the beginning of the month or year we happen to be closing out January, can start and be ready to go. So to do that, we're going to go to the closing entries tab. Now, it's important to note that there's a couple ways we can do the closing entries. We can do it in a four-step process, or just think about it in a one-step process. We might be using software that does the closing process for us to some degree, although we still need to know why it is doing it and how to safeguard problems by having some kind of close, some kind of freeze on prior events, so we know how things roll forward and what problems will happen with it. We're going to use a four-step closing process, which is a typical closing process for a book problem. Our goal in practice is really to understand, if we're using accounting software and we run a report, for example, for the month of January, and then run reports for the month of February, we want to say, well, what happened to the income statement numbers? How does the income statement relate to the balance sheet? How should the month of January statements relate to the month of February statements? And in order to know that, we have to know the closing process to some extent, to some degree, and we'll go through a four-step closing process to understand that. Our goal of the closing process at the end of the day, and again, we could do this with one long journal entry or multiple journal entries. We're going to do it with four. Our goal at the end of the day is to make all temporary accounts, which are going to be all income statement accounts and the draws accounts for a proprietorship, 0, and to put the balance of all those accounts into this capital account. So don't do this, but this is basically what we're trying to do. See, all these numbers here, if I add them up, credits minus the debits, add up to 103,600. If we shortcut this, then if I delete all of these items, we want to have all these be 0 at the end of the day. And then, so don't do this, it's just an example. And then we want to have this one net credit 103,600 here. That's what we're going to end up with at the end of the day. So we end up with something that's still in balance. The balance sheet accounts staying the same, assets and liabilities. The equity accounts differing in that all temporary accounts, all accounts below the capital account, are now 0, and the capital account represents all of those equity accounts in one number. 103,600. That's what we're going to end up with, but we're going to do that with journal entries. This is called the post-closing trial balance. So anytime you see a trial balance that has no temporary accounts, no income statement accounts or draws, that's probably because it's at the end of the time period before any activity has happened. So, or at the very beginning of the time period. This is the end of January, the beginning of February. Also note the relation between this to the financial statements. If we go to the financial statements tab, then we really have just the balance sheet here. So we've got the balance sheet at the end, which is assets, liabilities, and equity represented by one number. We don't have any income statement because we're really waiting till the next period, till February, and therefore have no activity as of this point in time. And the statement of equity is what we're doing in essence with journal entries on the trial balance, meaning we're starting with beginning capital, which is really the 100 because it includes investments on trial balance. Then we're going to close out income to it, net income, revenue and expenses, then draws, which will leave us with the ending balance, which is what we're showing is our end goal right now. So that 103,600 back to the closing process is that 103,600. So I'm going to reverse this, and we want to get to that same number with debits and credits. We'll do that with a 4-step process. We're going to close out revenue to the income summary. This is going to be a new account, a clearing account that we make up. We'll see its purpose as we go. And then we'll close out the expenses to the income summary, which will leave net income in the income summary. That's why we do it, because it gives us a check that this income summary at that point should match what's on the financial statements on the income statement, and that all these numbers should be 0 at that point. Then we can close the income summary out to the capital account, and then we'll close out draws to the capital account, which will leave us with where we just saw all these accounts being 0, and this account being the sum of all of them, credits minus debits, 103,600. Okay, so let's do that. So first we're going to do that with step 1. All of our transactions are going to be as of the end of the month, so we can prepare for the beginning of February, and we're going to close out revenue. Revenue has a credit balance. We're going to make it go down, doing the opposite thing to it, a debit. So I'm just going to copy that revenue. We'll put that up top in cell B5, right click and paste 1, 2, 3. We can put the amount here, but I'm just going to use a little formula. This is a credit. We need a debit. So I'm going to take a negative of this number. Now don't pick up this number because that'll cause a circle reference, which I'll show you what a circle reference is in the future. But for now, just make sure to pick up the 27,000 in this column. That'll be our debit. And then we're going to credit something for the same amount. I'm going to put negative of that number to represent the credit. Now the credit's not going to go to capital yet. We're going to put it into this new account, this clearing account, this income summary account. We haven't seen it before because it's only here in the closing process. It's like a temporary account in that it's going to be 0 at some point, but it's more temporary than these accounts and really deserves another name, like a clearing account or something like that, because it's going to be 0 before the closing process and 0 after the closing process. It's just there for a check figure to see that net income will be in it after closing revenue and expenses to it before we close it out then to capital. So then we're going to copy the income summary. We'll put that on the bottom in B6, right click and paste 1, 2, 3. That's going to be our first journal entry, 1 of 4. So to post this out, we're going to post this to the revenue. Here's revenue in our middle column. We are in H20 where we say equals, scroll up just a bit, point to that 27,000. That's going to bring this amount to 0. That's what we want to happen. We want to close all these out. We're going to put it into our clearing account. Just hold on to it for now before we put it to where we really want it to go, which is capital at the end of the day. So we are in H19 where we say equals. We're going to scroll up and post the second portion, 27,000, and enter. So what we've done now is achieved our goal of making revenue 0 and putting the balance into this holding account, 27,000 in income summary, where it will be held until we do the second part of our 4-step journal entry, closing out expenses to it, making that number equivalent to net income, this number, and then we'll take that amount and close it out to where we ultimately want it to go, capital. And then the 4th journal entry will close out draws to capital, and we will be done. For more accounting information and accounting courses, visit our website at accountinginstruction.info.